Welcome, everyone. My name is Rob Obedoza, and I'm the area representative for the California Department of Insurance. And welcome to the Las Virgenes Malibu Virtual Town Hall on Wildfire and Disaster Insurance. This town hall is hosted by the California Department of Insurance in partnership with the Assemblymember Jackie Irwin of District 42. Oops. Quick housekeeping notes. So this virtual town hall is being recorded. Audio, video, and chat will be monitored and recorded during this event. And this event is also being live streamed on Facebook at insuranceca.gov. As far as audio and video goes, we respect all participants in this convening today and want to create a safe space for all. By default, all participants will be muted and video is disabled. Video will be on for speakers only. Quick run through of the agenda for today. We'll start off with welcoming remarks and panelist introductions by Assemblymember Jackie Irwin, who will be moderating today's panel. Then we will have a presentation by California Insurance Commissioner Ricardo Lara on updates on wildfire insurance and the sustainable insurance strategy. We'll follow that up with a Q&A with the Commissioner Ricardo Lara. Amy Bach of United Policyholders, the Director of United Policyholders, will then present a roadmap to preparedness program, followed by a Q&A with Director Amy Bach, and we will also be joined by California State Fire Marshal Daniel Berlant. And then we'll close things out with closing remarks from the panel. And with that, I'd like to introduce Assemblymember Jackie Irwin to moderate today's panel.
Well, thank you very much, Rob, and thank you all for joining us this evening. Throughout the past year, the insurance industry has been in a state of flux. Many constituents have contacted my office, worried and upset about this issue. First, companies started dropping homeowners that lived in very high fire zones. Then non-renewals started throughout the state in all zones. Major companies are refusing to write new homeowner policies in California. As homeowners had nowhere to go, they looked for agents out of state, non-admitted agents, and if they were lucky enough to keep their current policy, their rates still skyrocketed. Many turned to the California Fair Plan, which is supposed to be the insurer of last resort. It provides less coverage for more money, and it was never intended to provide coverage for so many Californians. Last year, State Farm announced they are no longer writing new policies in California. And just last week, they announced that they would not be renewing over 70,000 policies, which unfortunately may be impacting many of you. While insurance companies are private businesses and they're not obligated to write policies, the commissioner, along with our governor, have put together a plan for a sustainable insurance strategy that they will now implement. Tonight, we have some speakers who will provide information on what the plan is to fortify both the industry and homeowners. They will offer suggestions on how you can help yourself, fire-wise changes that can help you get discounts, and changes to the industry that are happening right now to help homeowners. The Department of Insurance and the Las Virgenes Malibu Council of Governments have joined my office tonight to bring you tonight's town hall. Before I introduce the California Insurance Commissioner, I would like to tell you about our other guests this evening. Joining me in asking questions, which you sent in, is Alicia Weintraub, who is the mayor of Calabasas. She has a background in local government and has spent over 20 years working for cities throughout Southern California on policy-related issues. Also joining is Penny Sylvester, Mayor Pro Tem for the city of Agora Hills. Penny has made public safety and emergency services in Agora Hills a pillar of her public service focus. She sits on the Law Enforcement and Emergency Disaster Subcommittee. On the presentation side, here with some valuable information to share with us are Amy Bach, the Executive Director for United Policyholders, a nationally recognized advocate for policyholders and an expert on the insurance industry, and also Chief Daniel Berlant, who is California's State Fire Marshal and was appointed by the governor in 2023. In his position, he oversees the state's fire prevention programs ranging from building and fire code development, wildfire prevention, and firefighter training certification. He has worked for CAL FIRE in various roles since 2001. Thank you all for being here, and thank you to the audience for tuning in. And now I would like to kick us off by introducing the California Insurance Commissioner, Ricardo Lara. Commissioner Lara is California's 8th insurance commissioner since voters created the elected position in 1988. Previously, he served in California's Assembly and Senate. As a leader of the nation's largest state consumer protection agency, the Commissioner's Office continues to lead efforts to protect Californians from the impacts of climate change, including wildfires, floods, and heat waves, by pushing the insurance industry to be part of the solution and not part of the problem. Please welcome Commissioner Laura.
Thank you. It's good to see you, Assemblywoman. And we'll continue to tackle these issues that are so important for your community and throughout the state. Appreciate the time for us being here today, and to all the neighbors and our local elected leaders, our Calabasas mayor and our Agoura Hills Mayor Pro Tem, and of course, our great fire marshal who's done amazing work. And I can't wait for you all to hear from Amy Bach, who is really working so hard on behalf of folks that have lost their homes and our consumers. So good evening, everyone, and thank you for the opportunity to be here today. We are here to talk about the diverse range of insurance issues and challenges that we're facing here in California, and the steps we're taking to ensure all Californians have access to fair, affordable, and reliable insurance coverage. Let me just say this up front. Insurance can be really confusing, especially during this crisis, and many people don't think about the insurance until you actually need it. Our department is dedicated to helping the people who we serve to understand and make the most of your benefits, and we'll be putting several links in the chat box around how you can get a hold of us when you have any questions regarding any type of insurance. Using every tool that we have at our disposal, our goal is really to safeguard the integrity of the state's insurance market, which is composed of consumers, drivers, homeowners, businesses, affordable housing, realtors, essentially every business, every nonprofit, and every consumer that needs insurance to either do their business and to operate their business, I should say, or maintain their household or properties. And we are really addressing what is decades-long neglect of issues, and really taking on powerful entrenched special interests that make insurance more available, which in turn would lead to greater affordability. So if we're going to talk about the state of insurance market, I should say, I want to start off by addressing the recent announcement by State Farm, as our Assemblywoman was talking about, that the company will be now renewing. It's actually approximately 30,000 homeowners policy, and the rest are a combination of business and rental insurance policies, which really raises serious concerns about that company's financial situation. Questions around the company, questions the company has to answer to us regulators. State Farm is domiciled in Illinois. We are working with the insurance commissioner in Illinois to get a financial recovery plan for that for State Farm. We're in communication. It looks like April 14th we'll be receiving that, so that we can start looking at what is financially happening at State Farm. Are they overexposed? Are they in riskier areas? And really, what are some of the internal financial issues that are happening within that business? Because the last thing we want is that the folks that still have policies with them can rely on them to give them the benefits that they have and deserve. So, as the insurance commissioner, I hold insurance companies accountable and making sure that they're financially solvent and that they meet the needs to the consumers. We deal with companies that are national and multinational in scale. And really, to be effective for Californians, we join forces, like I was saying, with other states so that we can understand the basis of the insurance company's decisions and how they plan to recover financially. And that's exactly what we're doing with State Farm. And so, we need again to be confident in State Farm's strategy moving forward to live up to the obligations to California consumers. There's a misconception that when insurance companies pause or restrict new business, that consumers will be dropped immediately and left without coverage, but that is absolutely not true and against our consumer protection laws. We have time to explore your options to find coverage before you are non-renewed. The Department of Insurance has experts ready to assist affected consumers, in finding alternative coverage, either in the competitive market or through the fair plan, as the Assemblywoman was saying, so you don't lose any lapse of coverage. Prices have increased nationally. We need to get back to a point where insurance companies are competing for your business to drive down the cost. California is still way lower than, Texas and Florida, where they're unfortunately also going through an insurance crisis. And we are right in the middle nationally, but the risk continues to increase. And this is to the point where insurance is becoming unaffordable for many Californians, and we recognize that. When you look at our market, the top 12 insurance groups cover 85% of our state's homeowners market. And since 2022 alone, seven of the 12 insurance groups have paused or restricted new business. This is despite, by the way, justified rate increases that my department has approved and that might be pending currently with the department. And over the past decade, insurance companies have done far worse in California than nationally. During those years, you remember those years, the years of the Wildfire, 2017, 2018, California experienced 9 of the 10 largest wildfires in the history of our state, and 7 of the 10 most destructive, including the Wildfire. And as a result, we face a really tough question, which is, can consumers actually get insurance that they need? And I know those of you in your district, someone, the majority of the answer is going to be no. And, really climate change impacts are accelerating, and we need to take action to expand insurance availability really over the next 10 years if we really want to get out of this insurance mess. So, as you mentioned, when we've been working on what we are calling our California Sustainable Insurance Strategy, is really a result of meeting with California homeowners, business owners, fire chiefs, agents, realtors, homeowners associations, summer camps that are still having trouble getting insurance, our farmers, our ag community, our ranchers, many across the state. We've held meetings either in person or virtually like these in all 58 counties. And really, this is unprecedented in the history of our department, because we were trying to get as much information to really understand what was happening on the ground when it came to the affordability and availability of insurance. Our goal is really to create a modern, sustainable insurance market that incentivizes safety and reduces risks, and that it doesn't retreat from high-risk areas, but instead utilizes long-term strategies to continue to provide coverage to consumers. My strategy really consists of several components. Together, those will make, we know, are very confident it will make it easier for Californians to access insurance. So the 3 components is, we need to streamline the rate application process. Second, we need to introduce risk management tools such as catastrophe modeling and the net cost of reinsurance, with a commitment from insurance companies now to write 85% of homes and businesses in these wildfire distressed areas. And of course, we need to strengthen the FAIR Plan, and we need to depopulate the FAIR Plan as quickly as possible. Those are the 3 main objectives. And I'll go really quickly into each of those components, and then, I know we have some questions. So under the rate application process, under California law, insurance companies are free to propose rates at any level. There's no maximum. However, insurance companies, their rates include estimates for future losses, expenses, and a reasonable rate of return. My department is, as a consumer representative, reviews these rates to make sure we're getting the best value for our money. So we are focused on strengthening and making sure that they're fair, they're actuarially sound, they're not discriminatory, and again, that they're fair across the entire market. So we are focused on strengthening our rate regulation branch so that we can meet the current demands of the rate applications that are before the department. Before, it would take almost a year and a half to approve a rate that when the department would approve it, it was no longer meeting the actual risk profile of a certain community or a certain part of the state or the overall market. So we need to do a better job in the department to make sure that we're getting these rates out quicker so that you could get some certainty and you're not in constant threat of being dropped every single year. That is one thing that we kept hearing from consumers and business groups and the insurance industry. Catastrophic models. Another component of the strategy is allowing new risk tools that can support greater availability of insurance. For the past 30 years, our department has used historical loss data as a method for estimating catastrophe adjustments in the entire California rate approval process. However, just looking to the past, I know you can all relate, as we're all looking at our climate changing, does not give us the full picture. And it does not take into account, more importantly, what you are all doing on the wildfire safety side through home hardening, prescribed burns, and healthy forest projects to make sure that that rate actually reflects the work that you've done. Currently, I think we are one of only 2 states that don't allow for future catastrophic modeling. So we're way behind on this. And more importantly, again, this will give us a tool to say, okay, Assemblywoman Irwin, we see that you've done your defensible space, you have your metal roof. We need to take that into account into your rate. So we're actually giving you the discount that by law you have to get now for home hardening, which right now we have no technology of no way of getting that done. And so that has to happen as soon as possible. So allowing insurance companies to use catastrophic modeling in the rate calculations will better anticipate future potential catastrophes. It will help us as a department inform the legislature, inform the governor of what these future casts looks like, so that also will help us determine where we build, how we're building, where are we most at risk, and what are we seeing in terms of the latest climate change data, so that we could better prepare ourselves for whatever might happen in the future. And this, again, insurance companies have told us is critical for them to be able to forecast their risk so that they can continue to grow in California, understanding where the risk is and how to manage it. Currently, we don't allow for that. So we're all operating essentially blindly somewhat, and that can't happen. So let's talk about reinsurance. Reinsurance is a tool that many insurance companies are using to manage their climate risk and continue writing policies. But Californians do not pay the cost for, but Californians must not pay, I should say, the cost for East Coast hurricanes, Midwest floods, or, the latest fires in Texas. The problem with reinsurance is it's a finite amount of money that is used to reinsure companies, insurance companies after these big disasters. And so right now, insurers are paying more to manage the growing natural disasters and losses. And we need to recognize that reinsurance that has to be accurately reflected in the cost of writing insurance in California. We're working on that as well. We want to make sure that we pay for our California risk and that we're not being lumped into the rest of what's happening around the globe, which tends to be happening. So lastly, around the FAIR plan, I know many of you are on the FAIR plan. We have to make massive improvements. While we focus on shrinking the FAIR plan, it will still be a temporary option in the short term for many Californians. We need to make improvements so that it can serve its legislative intent to really create stability in the property insurance market, while really providing consumers with the best possible consumer service. So, we've increased the coverage limits for the first time in 2 decades, from 1.5 million to 3 million for residential policies, and from 3.6 million for its business owners to 4.5 million for its commercial property policy, to 20 million for both options, to give you more expanded coverage. So we are working now to expand that coverage limit even further to help our larger HOAs, our condos association that we keep hearing are also having difficulty. So they have a temporary coverage that they need. And this is, again, as we implement our plan, we're depopulating the FAIR plan. And a word to the wise, if you're in the FAIR plan and you've done your you've done your mitigation, you've done the Firewise and all these things, you're going to be the first property to get pulled out of the FAIR plan and be given an opportunity to go back into the admitted market. And so these are some of the changes that we need. I know, we still have to look at flooding. We're looking at how Again, earthquake continues to be an important issue, but I don't want to keep rambling on. And I know people have questions, so I'll pass it back to you, Assemblywoman. I'm sorry about that.
All right.
Just so much information.
Yes, thank you so much, Commissioner. That was definitely a lot of information. So we all have some questions from the audience. Some of it you covered, but just to really get to the point of what's important to the people that are on today. We want to know, because I obviously on the one hand we're talking about cost, but the issue that I think is scariest is access. That we get calls constantly from people who have had their insurance company drop them. So what are you working on that you believe will most increase access to insurance for all residents that are struggling with this issue? And as you know, we have a community, the 42nd district, that is all through the Santa Monica Mountains, on the periphery of the Santa Monica Mountains, and many of those cities and communities are dealing with this issue.
Yes. No, and you know, I've had the pleasure of being there and touring after the Wildfire, as you know, and meeting with some of the leaders there. You know, the way we're going to get availability and increase access to coverage is by finally addressing these tools that we keep talking about, that the insurance companies need to be able to better assess the risk that currently they don't have access to. We're still relying on historical data, which we know no longer is adequate for us to be able to determine where are we most at risk. And then also, there is no incentive right now for homeowners to do the home hardening because they're still going to get dropped. And so this is why the catastrophic models becomes very critical, because one, the insurance companies have told us, allow us to use future casting so that we can start looking at what the future is going to look like in California. But and my request was, well, then allow us to keep those public so that we can look at the home hardening that neighbors and residents have done so that they can get the discount that they need. So we're incentivizing them by forcing insurance companies to give you a discount for your home hardening so that we're bringing down the risk. We bring down the risk. We keep insurers writing in these communities.
All right, and we have a question now from the mayor, Alicia.
Thank you, everyone, for putting this on tonight. You touched on this a little bit, but further, what alternatives are being planned to help HOAs get insurance at reasonable prices?
Yeah, thank you, Mayor. That is a great question. We have been meeting with the statewide HOA association and meeting with so many of the association groups. What we're seeing is right now, as the markets are retracting in the homeowners, are also now retracting in HOAs, and especially for our HOAs that are in buildings that may not have been mitigated or have not done the fire mitigation that is needed, which is also very expensive, which is also one reason why the HOAs are kind of lagging behind in terms of being able to do that. So what we are doing, and when we met with the HOA association, they said, can you, at least for the time being, as we're going through this crisis, allow us access to the FAIR plan at an appropriate coverage limit so that we, one, can find insurance, and two, so that our properties can stay coverage at a limit that makes sense for us so that we feel that we're properly covered. And so this is why we worked with them to get the FAIR plan to do a 20 million coverage limit per building, not per area. And that would especially help our HOAs. And so that was a big win for us. And again, we stay in constant contact, I should say, with the HOA statewide association, who's working through these problems with us.
Thank you so much.
And Mayor Pro Tem.
Thank you, Commissioner Lara. Research shows that flying embers are the cause of urban conflagration, which is a new term we're learning. Why isn't the state directing our local fire departments to enforce the 0 to 5 home hardening requirements, such as installing the 1/8-inch soffit vents, the gutter filters, and clearing the first 5 feet around our homes? I mean, if our goal is to get insurance companies to return to California, we have to show that we're doing our part to lower that risk. And during the drought in the last couple of years, the state mandated water restrictions with all our local water districts. So why isn't the state being more proactive in pushing the home hardening?
I'm going to pass that. That's a perfect question for Chief Berlant. Chief, do you want to take that?
Commissioner, I'll back up you on this one. Great question, Mayor Pro Tem. I will tell you that the science is there that embers are the result or the cause of most of the structure loss in our wildfires. And that first 5 feet around a home has really been determined to be the most vulnerable to wildfire from those embers. And as a result of that, the legislature did pass legislation that will require a flammable free zone around the homes. That requirement lines up with the Commissioner Safer from Wildfires framework that's adopted by or will be adopted by the insurance companies in their requirements. The State Board of Forestry and Fire Protection continues to work on the regulations that will really spell out the details. But very soon, new homes built in California will have to ensure that they don't have plants or anything flammable in that first 5 feet. And then following behind that, a year later, that will be required on all existing homes in wildfire-prone areas. And so the answer to your question is, it is coming. It is a great recommendation. Later on, I'll drop into the chat feature a great link where you can learn more about Zone Zero and all those home hardening steps and those defensible space items. But completely agree with you. That is where we need to go. And with the commissioner's support, that is where the Safer from Wildfires framework goes as well.
Thank you.
All right, thank you for that. I also, we have a constituent that talked about their home fire insurance going up 80% in 2 years. And isn't there a limit to insurance company rate increases because of Prop 103? And will returning insurance companies be allowed to raise their rates by a certain percentage? And what is the limit of that? Because as I said, the two issues are accessibility, but we can't have these really high costs for insurance.
Yep, those are the big two, Assemblywoman, affordability and availability. So the answer under current California, the straight answer to current California law, insurance companies are free to propose rates at any level. There is no maximum. My department, again, has an entire group of folks that make sure that they're actually sound, that they're based on risk, that they're not discriminatory, and that it makes accountable, actually sound, I should say. Our experts carefully review each rate application, and it's a delicate balance, I have to tell you, of ensuring companies remain solvent so that they can pay out their future claims and continue to offer coverage in our state while not charging excessive or unjustified rates. And so this is, again, why our Safer from Wildfire regulation that we passed a couple of years ago that will help drive down cost of insurance for homeowners who take steps to reduce the risks of fire by providing those discounts for fire hardening homes and communities. There are a number of companies that offer both community-wide mitigation discounts, such as if your home is in a FireWise or a shelter-in-place community, and home-specific discounts, for example, maintaining defensible space or home safety measures against windblown embers, as Chief Berlant was saying. So we have a list of companies offering these discounts on our website. I'll have staff put that up there, but you can also just call us. And if you call us, we'll have somebody Monday through Friday there talking to you, giving you advice and giving you some help as how do you access these discounts, who's writing, how do we help you bring down the cost of insurance? And so we're here to help you. Give us a call.
Okay, so we've heard about all the plans that you have, catastrophic modeling and being able to charge secondary insurance. I think what our constituents really need to know is, when are these insurance companies going to come back? And do you have some sort of timeline when the reforms that you are talking about are going to be put in place?
Yes, good question. So when I've committed to the legislature and to the governor that we would get these regulations done by the end of December 2024. And that means hopefully fully implementable by the end of the year. So we are I'm proud to say we're ahead of schedule. We'll have staff put in the chat box when we have the community public hearings on these regulations. I think we have one coming up this month. So we have to go through the open meeting public hearing regs and do all that for you all. And so we encourage you to join the conversation, tell us what your experience is as we're crafting these regulations, and we'll have them fully implementable by the end of the year, December 2024.
And you have an indication that insurance companies will be coming back to California then?
Yes,
Or
thank you for reminding me. Under this really historic agreement, working with the insurance companies, they have committed that if we get these regulations done, they are going to write 85% of their business will go to areas like your communities. We are currently mapping that out per zip code so that we know that if your community has a penetration rate of 15% of the FAIR plan, you are a priority zip code to make sure that those homes get out of the FAIR plan into the admitted market to bring down that pressure of the FAIR plan. So that has been their commitment from day one. If we allow them to use these tools, they're going to provide the discounts. They're going to increase in the wildfire areas. And we have the current authority now that if they go back on their words, we could bring them back in and reassess their rate should they go back on their word.
Okay, and then I have one last question about the FAIR plan. How are we going to be able to ensure its stability? We hear stories about if there's a big fire in Big Bear or in Tahoe, then the FAIR plan could be in trouble. So how can we modernize it and make sure to get residents out of it so that we don't have such a high percentage of Californians that are relying on the FAIR plan, which does not have the coverage that regular insurance has?
That's why our number one priority with the FAIR plan, one, has been to increase its coverage limits so people have some sort of appropriate coverage and the last thing I want them to continue to do is paying more for less coverage. And so we wanted to up the coverage limits. Second, we want to make sure that out of the deal that we talked about, simultaneously as insurers are writing in these communities, that there's depopulating the FAIR plan at the same time. Taking those homeowners that have hardened their homes, those are the first to go and be able to be given a policy. That's going to be critical because we need to take off the pressure from the FAIR plan. And then what we did is one of the big modernization tools we did. The FAIR plan wouldn't give you a comprehensive policy. We forced them to do that because if we're going to send people to the FAIR plan, we have to make sure they have at least a comprehensive policy option so they don't have to buy all this wraparound insurance that only exacerbates the cost. So we've done that. Additionally, we want to make sure that the FAIR plan not only decreases, but keeps those coverage limits so that people that are still in there at least have appropriate coverage. And everything from customer service, having somebody on the phone, being able to pay with your credit card. I mean, it's even basic things like that most of you that are on the FAIR plan know that it's really difficult to get somebody on the phone, get somebody to call you back, I mean, these are just minimum things. And so we're working with the legislature and legislative leadership again also, and with the FAIR plan, which, by the way, the FAIR plan, for many people that may not know, is actually run by the insurance companies. They are the ones that sit on the board of the FAIR plan. It is not a government agency. It was set up by the government, by the state legislature, but it is run by the insurance companies themselves. So they've promised that once we get these things done, they're also going to depopulate the FAIR plan. That's why we need to get this done. But you're right, Assemblywoman. What keeps me up at night is that, in between us finishing these regulations, that we have a massive fire, another flood, or an earthquake, and it further exacerbates the FAIR plan, which cannot happen anymore. It's really at a point where we need to get those people out as quickly as possible.
Yes, I appreciate it. And I know your time is limited, so I really appreciate you joining us. This is a very tough time to have the insurance commissioner job, but you know that our constituents need relief, and we hope you work as quickly as possible to get these regulations in place so that we get insurance companies coming back to California so that we could see some competition in this marketplace and as I said, some relief for our constituents. But thank you very much for joining us today. For everybody that's on, there is all sorts of contact information in the chat. And Commissioner Lara has said that if you have issues finding insurance, to reach out to the insurance commissioner's office. So again, thank you so much for joining us.
Thank you. Thank you so
Commissioner
much.
Lara. All right. Next up, let me introduce you to Amy Bach from the nonprofit United Policyholders. Amy, thank you so much for joining us today.
Assemblymember, I'm so pleased to be here. Although, as I say, it's not the good circumstances that are bringing us together, but very glad to contribute to helping your constituents find their way through this thicket that we all find ourselves in. I have a short PowerPoint that I'm going to share now. Bear with me. All right, hang on a second. Let's get to there we go. You've already heard quite a bit of this, so I'm going to zoom through so we can get to the questions. So just a little bit about my organization, if you haven't heard of us. We are a unique consumer advocacy nonprofit that has your back when insurance matters. We don't accept funding from insurance companies, and we are in our 33rd year of serving California consumers with regard to insurance matters. We did a lot of work after the Woolsey fire and the other fires that hit your region in the past, which has contributed to your zip codes having even more of a target on your backs for insurers than communities that have not had wildfires. We offer trustworthy plain language info and expertise on buying home insurance and navigating claims after a loss. We are working very closely with Commissioner Lara and his team, as well as pro-consumer insurance agents, realtors, Firewise communities throughout the state, all the stakeholders, CAL FIRE, local fire departments. There's a lot of people that are working to try to get us through this problem, to bring affordable, available options back for you. But as you heard from the commissioner, we've just got to be patient here because we're not going to get a change overnight. But we do have some backups for you. So my organization is closely monitoring the marketplace, keeping our ear to the ground, which insurers are still writing where. And we are working hard to help increase the number of hardened homes with defensible space around them, and to help you keep your property adequately insured despite the crisis. The bottom line is, we've already covered this, not just in your area, but in many other zip codes across the state, particularly those that have had wildfires and that have a lot of trees. Name brand insurers have either stopped selling new policies or imposed strict limits on their agents as to how many new policies they can write. What we're going through a bit of a plague here. And my organization has a survey that we've been running now for the last couple of years that we are using to hear from you. I'm going to have a slide in a minute that shows you the link for the survey. We ask you to fill it out. It's just our way of knowing what is happening, which companies have dropped you, which ones have picked you up, and what happened to your premium. And we also ask you if you want to share your story, because we are getting requests all the time from reporters who want to talk to people who are in the middle of this. As you heard from the commissioner, and you may already know, the California FAIR Plan is overwhelmed. They switched to a new tech platform in the fall, and it's been very slow. There's some improvement in them issuing policies. We hear about people trying different strategies, calling on a Saturday morning, starting early in the morning, etc. None of this is good, I know, but it is good that we have it. It's really, in some ways, the FAIR Plan is better than some of the other states' high-risk programs, because it is really insurance companies' dollars that are on the line there, not taxpayer dollars. So, you know, if you hear, oh, the FAIR Plan's worried about running out of money, they're not going to run out of money as long as there are still insurers participating in the plan. I think the bigger concern is because their financial strength is the financial strength of all the insurers that are participating. So the bigger concern is that just keeping things stable so that we don't lose more insurers and then they would leave the FAIR Plan. We're not there. So a lot of my goal here is to try to help stave off panic. I hope you got that vibe as well from the commissioner. We're not here with a smiley face, but we're here to say that you do have options. His sustainable insurance strategy aims to increase those options. My organization's advice at the end of the day is finding a good agent or broker is really the best thing to do right now. You know, when I hear about people going all the way down the list of all the insurers and getting frustrated, I would say that's not your best move here. It's really finding an agent that's hustling, finding options, and staying on the case, because the market has little pockets here and there of availability. It's just a matter of figuring out what's a match for you. So I have to remind everybody that avoiding underinsuring your home is still very important because my organization has been 33 years now going into wildfire impacted areas, finding out that people, 2/3 of the people didn't have enough insurance on their dwelling. So we would, even though this crisis is challenging, prices are high, if you have to sacrifice, try to keep your dwelling covered. Just the home is the most important thing. So what are the rules? You got the 75 days. If your insurer is not going to offer you a new policy when your current one expires, they can drop you, but they have to tell you your risk score and offer you an appeal process for improving your score. This is something that Commissioner Lara and his team put into place, and it's important because when insurers started slapping numbers on people, just like you have a credit score that affects your what you get charged on a loan. Once they started putting risk scores, it made it a lot more impersonal. So it's a lot harder now for an agent to go to bat for you to get an insurer to not drop you if you don't have a great score. So anything you can do to improve your score is helpful. So yep, the FAIR Plan is there. They have to take all comers. And the first risk reduction mitigation discount that the commissioner's agency approved is for the FAIR Plan. So you can get up to 15% discount on your FAIR Plan policy, which I'm going to explain in a minute. So you heard about his strategy and that patience is in order here to give it time to get through the process. Start shopping right away is probably one of the most important things I can say about what to do when you get non-renewed. And if the FAIR Plan is your only option, then you can put the policy in place, but keep shopping because the market is still got some play in it. There's still some new players or some options that you may not have heard of. 4 types of insurance companies. A lot of folks are moving from the brand names, State Farm, etc. Those are the admitted ones, to what are called surplus or non-admitted companies. The problem with those are they are not backed by the insolvency fund. So if they don't have enough money to pay claims, there's no safety net. So they are a little riskier. But for a lot of people, it's the best of the worst option right now. And that's where we are. The last option there, the force or lender place, that's what, if you have a mortgage and you let your insurance lapse, you're going to get a letter from your mortgage company saying, we have put a policy in place. We have lender placed. Really, you don't want that. They're very expensive for the coverage that you get. They only cover the amount of the loan. So that's not where you want to be. These are some of the ones that are admitted and licensed. This is always, of course, your best option if you can. The names that you recognize, those admitted licensed companies. The ones you might not have heard of that your agent may be recommending, these are some of the names: KW Specialty, Bamboo, etc., Northlight. Like I said, a little more risky in some cases, but if they have financial strength, it can be okay. It's just good to work with a good expert so that you don't end up with a policy that has weird exclusions, because those surplus lines policies are not as regulated. Here are some resources for you to use to check on an insurance company you've never heard of. These slides will be available I will make sure that the Assembly member has these. These are our affordability strategies. Find out what discounts are available, ask for those you qualify for. Bundle your home and auto with one company, work with an agent, I already said that. Raise your deductible, reduce or eliminate buckets of coverage you can live without. That's a tricky one. Some insurers won't let you break apart a certain set percentage of contents versus structure, but try. It doesn't hurt to ask. Mitigate. Harden your home. You'll hear more about that from Chief Berlant. You already heard something about it. It's just so important right now. And don't file small claims. Why do we need people to clear the 5 feet and do the things on the list here on the left? Because not only is that that's what firefighters say allows them to save homes, so it's better for you as a homeowner. But also this is what insurers are looking for. They are looking for those better risks, right? They have said risks are higher. They are looking for the better risks. This is a free resource center that my organization offers online for you to find out who's offering mitigation grants in my area, who can I turn to get help in doing those steps. Little bit about the FAIR plan. You can buy a basic policy from them and it does not cover water damage, theft, or liability. You can buy an extra product for that. The commissioner put some information in the chat on that difference in conditions option. But it is good to know that when you buy a FAIR plan policy, you can get a slightly better upgraded version. So these are some of the options, right? You can get replacement over depreciated value. You can get an increase in your fair rental, which is the equivalent of your temporary rent that you'd get coverage for your loss of use temporary rent. So those are options that you can add on to a FAIR plan. And I am not a Pollyanna here. I know that the premiums are really, really rough and it's hard to think about spending more on top of it. But these are your options. And if you're spending the money, it's better to have the coverage that you need. Those 2 FAIR plan discounts, 10% for those home hardening steps. And I want to acknowledge a Los Angeles area insurance agency that created the slide, our friend Carl Sussman, who's in this battle with us to try to solve the problems. And then 5% for creating conditions around your home that make it easier for firefighters to save your home and less likely that embers or flames or radiant heat will take it down. So in conclusion, and I appreciate this opportunity to boil it down, get educated, seek out a good broker agent, try to keep your dwelling insured for what it would cost to replace it, try out different deductibles, do what you can to trim non-essential coverage, create your inventory with your phone, help your community be fire wise or fire safe, and then mitigate. A lot of work is going into getting you those discounts. It's a work in progress. We're not quite where we want to be. I would like to see all insurers giving you a 15% discount for reducing risk or even more. We're trying to get there. They are very, insurers like to go on data. They want to see more evidence of communities that didn't burn because they did XYZ. Just a reminder that if you think, oh, well, there's government money, and if I burn down, I can go bare. The most you'll get from FEMA on an individual assistance grant, which is needs-based, is $42,000. Plus now there's a housing assistance program. But SBA loans are great, low interest, up to $500K, but you have to pay them back. There really is no substitute for the kind of dollars you'll get from your from an insurance policy. And I know you all know that. That's why you're here. You're trying to keep your homes insured. I get it. And we are trying to help you. Please take our survey. We really appreciate the data. Assemblymember, thank you so much. And I'm happy to stay on and answer questions. Our organization is going to bat for consumers in every way we can to get through this crisis.
Oh my gosh, Amy, that was a lot of good information. If we can have our other panelists and the fire marshal unmute and turn on their videos, we obviously are on a limited amount of time, but we're going to get through as many questions as possible. But I first want to, and then either Amy or Daniel, if you can answer depending on if it's your expertise or not. But Amy, where can we get, because I was taking screenshots of your PowerPoint there. Is there a link that you could put in the chat, or could you put maybe an email where if folks wanted to get a copy of your PowerPoint, that we would be able to give it to them?
Yes, I'll be happy to send your office the slides. If you would like to post them, you want to distribute them to your constituents, it's fine.
Okay, that would be excellent. So why don't we have Mayor Pro Tem Sylvester start us off?
Well, thank you so much, Amy. What an amazing amount of information you've given us. You've actually covered all 3 questions that I had for you from various callers. So I appreciate that. And again, I think the most important thing is educating our residents on the home hardening and the 0 to 5 zone. And that is how they're going to protect their homes and get the insurance that they need. So thank you for giving us all that information.
Well, you're welcome. I think that you asked a question earlier of I think Chief Berlant answered, why aren't we doing more? I think, CAL FIRE is doing, all the firefighting agencies and all of us in the preparedness nerds are trying to get the word out. But honestly, Mayor, we're asking people to sort of uglify their homes, and it's very, very tough. It's a tough sell. There are even HOAs that won't even let you, or there are restrictions on taking away foliage and replacing wooden fences with metal. So we do have our work cut out for us convincing people that it's worth it to do all this.
Yeah, I agree with you. It's an uphill battle, but I think when it touches our pocketbooks, that's when we're getting the response.
Yes.
Because if we don't do it, we're not going to get insurance. So thank you.
Thank you very much, Mayor Pro Tem. Mayor Weintraub.
Thank you. And thank you for the great presentation. I'm looking forward to receiving the slides that we can share with our communities. You touched on the different options for insurers, but in your opinion, are there currently any very active insurers in our area?
Actively, aggressively writing? No. I would say sometimes it's a matter of, an agency has a quota, like they can, and if somebody leaves, goes off of the plan, then maybe they have an opportunity to put a new customer in. Aggressively advertising, I don't think so. And it's interesting. Some of the insurers that are still writing are nervous about publicizing their names because they don't want to get overwhelmed. But there's no one who's out there, we've been hoping, like, where's the entrepreneurs that are coming and going to come and say, I see an opportunity here. I think that the whole industry is kind of waiting to get those regulations in place as a whole. They want to be able to use that models.
Thank you so much for your honest answer.
All right, and for the fire marshal, who makes the fire maps, and what are the criteria for high and very high fire zones? And then can you appeal your zoning, and how do we do it, and how can we find out our wildfire risk status? It seems that in like Thousand Oaks that everybody is in a high fire zone, so it is a little bit confusing right now.
Yeah, we recently just adopted a new map for the state responsibility area. This is 1/3 of the state that's outside of incorporated cities that is within the state's jurisdiction. CAL FIRE, or there in Los Angeles, our contract with the Los Angeles County Fire Department. But our office just went through remapping again 1/3 of the state. We do that mapping using with our fire scientists and our mitigation experts. And we developed a science-based and field-tested model that took in updated weather conditions, updated factors including weather, topography, fuel type vegetation, that is, and with a very complicated formula, assign an area a hazard score. And essentially those hazards are categorized into 3 steps. moderate, high, and very high. But to your point, in this remapping process, a lot has changed since we did the last map, which was done really 15 years ago. And arguably, we all know we are seeing more fires here in California as our conditions are changing. We're seeing not just more days that are hotter and drier and windier that are prone to wildfires. So our conditions have changed, which have really is why we're seeing the result in this latest map of more areas being defined in a higher level of hazard. But really, what's really important in this conversation, and then I'll get to your question about how do I get out of or appeal. What's really important in this conversation is to know that these hazard factors that we use are very similar factors that insurance companies already are using to make their decisions, but they're incorporating a significant more amount of risk-based factors. And so in reality, the insurance companies are not looking at our map or relying on our map and saying, you're in red, so now we're going to make decisions about your insurance. They're using a lot of factors, and some of them are the same to make those determinations. Now, to your question, though, about how do I appeal it? We just redid the mapping, and we went through 174 days of public comment. We received thousands and actually thousands of public comment. And as a result, we actually changed based on substantial evidence. It's kind of the bureaucratic word, but science that was provided to us that we were able to plug into our model that did reflect a change and actually lowered the hazard level, providing a more accurate picture of that science. And that resulted in over 123 acres across the state receiving a lower amount. And so that really was the process for the public to participate. Now, we will remap again in 5 years, but the next step here is we've been tasked with mapping the local responsibility area. These are areas that are within cities. We will not start that process yet until we really develop a strong plan with our city and county partners. We're working with the League of California Cities, the Association, California State Association of Counties, the fire chiefs, to really roll out a plan that's understood. So for those living in cities or maybe more urbanized areas that still could be impacted by wildfires, we will be mapping those areas, but we'll be working with community leaders as we go through that process and making sure that there's the ability for the public to weigh in as we go through that process.
Right. Mayor Weintraub, do you have some more questions?
I have one more question. We talked about residents trying to go develop firewise communities. One constituent received a notice from his insurance company saying that he needed to make all of these changes and then get an inspection for $175 to get a fire certificate. Is it legal that this resident can only use one person for their certification?
I'm going to defer to either the insurance commission staff or if they on the legality of the insurance requirement. But what I can tell you is that we have really been encouraging communities to get Firewise designation. It is a sign to insurance companies and to the community that this neighborhood understands the risks for wildfire and have a plan to mitigate. Now, probably this in this specific example, and to insurance companies, they still want validation of how they do that. Now, that may be in the result in some jurisdictions, a inspection from the fire department, whether it be Cal Fire, LA County, Los Angeles City, any of the other city fire or county fire departments that validate that, again, that home is in compliance. No, this isn't your question, but if you go to sell a home in a fire-prone area, new requirement does require you to actually have an inspection from the fire department showing that you're in compliance of defensible space. And so in insurance real estate, yes, it is required in wildfire-prone areas. For insurance companies, I think as it has been said, each of these are private entities, but I know that in our discussions, in trying to align wildfire mitigation, both with the Department of Insurance, but also the individual insurance companies and their associations, as we try to align it, it's not just the standards of what we ask for, 100 feet of defensible space, the 0 to 5 foot, the zone 0 that the Mayor Pro Tem brought up, the home hardening retrofit. But how do we validate that work is done? That is still a question to be, that has to be answered, that insurance companies, I think is a reasonable question for them to verify, to ensure that they then give those mitigations included in their decision making.
Thank you.
Amy, you covered a lot of material and we didn't get to all our questions, but do you have some maybe closing words for us?
Sure. I think well, first of all, it's completely understandable why people are hesitant to take down beautiful trees, beloved trees that give them shade. And if they're not going to, if they might still get dropped, and we get that by their insurer. So, that's what I'm saying. Like we really are working hard to push insurers to offer those discounts. There's also innovation going on. There's a community with a lot of HOA, with HOAs that have formed their own captive insurance company. There's some risk pooling innovation. My organization is looking into all kinds of innovative ideas, because obviously we now see how much power a private industry has over our economic health, and it's not healthy. So I think there is better skies ahead, but there is no question that we are going to be paying more for home insurance going forward. The question is we need to keep it fair and reasonable, and as long as we have rate oversight, it will be. I think the department is committed to getting those applications through faster. But the key is that we make sure that insurance companies are not over exaggerating the risk, that they are that we're aiming somewhere in the middle. Because yes, risk has increased, and yes, I think most homeowners accept that they'll have to pay something more. They just can't pay the prices that people are now getting hit with, and we got to bring it back into some sort of manageable realm. So thank you for your patience and for doing what you can in your community to increase the risk reduction efforts.
All right. And thank you so much to all of our guests today. I encourage you to continually visit the Insurance Commissioner's website for updates. As always, my office is available to help connect you with state offices and issues. Again, my contact information is in the chat. This town hall video will be on my website for viewing in the next week. We will also put Amy's PowerPoint on our website. And just to let you know, on June 8th, our office is partnering with LA Supervisor Lindsay Horvath's office to present a Be Prepared Safety Fair in Calabasas at the newly opened community center. There's going to be informational booths, touch a truck with public safety vehicles, hands-on displays and presentations, including many of the topics that we discussed tonight. And again, please visit my website for more details on that. And again, want to thank all of our speakers and all of you for joining us tonight. You being informed and letting your neighbors know what is going on is really important as we all work together on this critical issue. Thank you and good night.